In this presentation, we're going to record short-term investments. In other words, we're going to record a transaction to take some of our cash, take it out of the checking account, put it into a short-term investment such as stocks and bonds. Let's get into it with Intuit's QuickBooks Online. Here we are in our Get Great Guitars file. We're going to open up our reports first. We're going to go to the reports down below. We're going to open up that trusty trial balance as well as the balance sheet. Let's start with the balance sheet first. We're going to open up our favorite report, the balance sheet report. We're going to be changing the dates up top once again to 01/01/20 to 12/31/20 and then run that report. I'm going to duplicate the tab up top, right-clicking on the tab up top and duplicating it. I'm going to go back to the tab to the left so that we can then open up our trusty trial balance. Going to scroll back down to the reports. We're going to be typing in the trusty trial balance up in the search screen because QuickBooks puts it way at the bottom. And it shouldn't be because it's like a really important report. So I'm going to put trial balance. We're going to use it so much it's going to be in the favorite reports at some point in time. And then we're going to go back up top. We're going to be changing the dates up top from 01/01/20 to 12/31/20. Let's run that report, and then we'll duplicate the tab up top. Once again, right-click in that tab up top, and we're going to duplicate that tab up top. There we have it. Now, if I go back to the balance sheet, our objective at this time is we're going to say, hey, well, let's close the hamburger. Let's hold down Control and make it up to 125. We're going to say, hey, there's going to be a lot in the checking account right now. We're going to spend it soon, but we want to put it somewhere else for the short term. Now, remember, we're in the business of buying and selling guitars as well as guitar services. We're not in the business of basically stock brokering to make money on passive income. So notice that most small businesses that is the case. Unless you're in the business of basically financial investment business, then typically you would want to take your financial investments and usually take them out of the company. In other words, if I had this Get Great Guitars company and I had more money than I needed in the company in order to help generate revenue in the company, and I wanted to put it into stocks and bonds, typically I would take it out of the company and then invest it personally under my personal investments into stocks and bonds. So just be aware that you want to make that distinction. However, if you have some money that's in here and you want to make a short-term investment in the business checking account to stocks and bonds, while you're holding on to the money before you have time to spend it, but you need it in the organization, then you may put some money into the stocks and bonds. So we want to show that transaction to put the money into the stocks and bonds, what that would look like, what it would look like if an investment became due at a later point in time and whatnot. But just realize that, again, unless you're in a type of industry that basically the company is such that it's making revenue from passive income, such as investment income, if you're in any other kind of company, like saying selling guitars, then typically when you do your investments, your money investments into stocks and bonds, you probably want to take them out of the company for the most part, only putting the assets in the company that you need in order to help you generate revenue in the future. Once those assets get too high, a lot of cash in the company, then you typically want to take that cash out and then invest it personally basically into stocks and bonds. All right, that aside, what we're going to do is we're going to take some of our money out of the checking account. We're going to put it into the temporary investment related to the stocks and bonds. So this is another transaction that it's a little bit unusual in that it doesn't happen all the time. We're not going to be doing this all the time in this type of business. So there's not a form that we would typically use. It's not part of the normal vendor cycle or customer cycle, and therefore we need to consider how we're going to make this happen. So it's going to be coming out of the checking account. So if I go back to our first tab and I think about the forms, I could say, well, it's money going out. I can basically have an expense form possibly or something like that. But if it's happening to the checking account, and it's going directly out of the checking account, to me, easiest thing is to go to the register. So I'm going to go back to the register and practice with that register. And remember, when you're using the register, it still makes forms, right? QuickBooks still generates forms with it. But the data input's a little bit faster. To me, it's a little bit easier to see and recognize to just put transactions that are just affecting the cash going up and down directly into the register. So I'm going to go to the accounting down below. We're in our chart of accounts. I'm going to be looking into the cash account up top. We're going to be opening up the register. I'm going to close the hamburger so we have a little bit more space to work in. I'm going to select the drop down, and then we can pick the appropriate type of form. Once again, I'm going to be using the expense form here and realizing that once again, it's not actually an expense. We're not doing an expense here. What we're really doing is taking money out of the checking account and we're going to put it into another asset account, which is an investment account. So there are two asset accounts being affected. One, the investment, like stocks and bonds or something that we're investing in. And then the other side is going to be the expense, the checking account, which will be going down. So don't let the term of the form, expense form, throw you off to the fact to think that there's an expense in the transaction. It's not. It's just a form for us to use for the checking account to go down, other than a check, because we're not writing a check. Okay, so we're going to say that this is going to happen on the 11th. So I'm just hitting the plus button to get up to 11. I'm not going to have a reference number. The payee, I'm going to say E-Trade as the payee, and I deleted it, E-Trade as the payee. I'm going to say tab. It's going to say, hey, do you want to add that? We're going to say yes. Is it a vendor or a customer? It's not really a vendor, customer, or employee. It's kind of like another bank or an investment firm. And E-Trade is I'm not promoting E-Trade or anything like that, but it's a investment, so we can make investments online and things like equity investments or stocks and bonds types of things if we wanted to invest in them. So I'm going to keep it as a vendor, however. I'm not going to add any more detail to it. I'm just going to keep it simple with the vendor so we can record the transaction. We're going to say save, and this is going to be an investment, we're going to say, and the amount that we're going to pay is going to be for $12,000. So we're going to take $12,000 out of the checking account, put it into that investment. Now, we don't have an investment set up yet. If I select the drop down, I don't have an investment account set up yet. It would be an assets type of account. So we're taking it out of the cash. We're not spending it to generate money, and therefore it's not an expense right now. It's just still an asset. It's just a different form of asset, a little less liquid, but hopefully earning us a little bit more money in terms of capital gains, possibly dividends and interest. So I'm going to create another account. I'm just going to call it investments. So I'm going to call it investments. We're going to then add that account. So if I select tab, it'll give me this screen to add it. Now, it's not going to be a bank account because it's not something that's that liquid. It's not that liquid. It is going to be a current asset account. So it's not a bank account. It's an other current asset. We're going to put it into other current asset. So it's a little less liquid than a cash account, but it's still current, we're going to say. So it's a current asset account. It's not going to be the allowance for bad debt. We're going to say the sub-account employee, inventory, investment. So mortgage, real estate loans, tax-exempt securities, investment, U.S. obligations. I'm going to put it into investment other. So we'll put it into investment other, and I'll just call it investments. And again, we might want to put more detail in that to the type of investment. We might put, for example, investments and then call it E-Trade, right? Or actually have the account in there. So if I had multiple investments with like E-Trade and Vanguard and my bank or something like that are all investing in stocks and bonds separately, then I can track these separately and maybe even put the account number on there as well. Now, note this is going to be a subcategory of within other assets, but if I have multiple type of investments, I may want another subcategory in there rather than just investments. Let's take a look. We'll take a look at that in a second. So I won't put that now. I'm going to say save and close. And so there we have it. And then I'm going to hold down Control and scroll down until I can see the save button on the right. I'm going to go ahead and save this. So there it has been recorded. And remember, the new recordings are on top here. So it's kind of in order. So the newest stuff's on top. I'm going to then go to the trial balance. Let's see what it did on the trial balance. I'm going to refresh the screen on the trusty trial balance. Going to close the old hamburger. Going to hold down Control, and we're at 125 on the screen. Checking account up top should be going down. So I'm going to click on the checking account. And we have the investment here to E-Trade. There it is for that $12,000. If I select that, what's the form that's going to be used? It's not going to take us back to the register. It takes us to an expense form. So there's the E-Trade, there's the checking account, there's the $12,000. Closing that back out, what's the other side going to be going to? It's going to be going to an investment account. Scrolling back up top, we're going to go back to our report summary. That's going to be another asset account. So here we have it, investment, E-Trade. If I select that item, then we see the other side. So there's the other side. Looks good. Everything looks the way it should. Scrolling back up, I'm going to go back to our report summary. Then I'm going to go to the balance sheet. What does this look like in terms of the subcategories? Let's refresh the screen again. And there we have it. So the checking account's at the 105, and then in the other current assets, now we have the inventory, and then we have our investments at the 12,000. So there it is, grouped up into other current assets. Now again, if we have multiple investments in here, if we're tracking multiple different investments with different areas, and we want to track different types of accounts in here, we may want to track more than just simply one account. And also note, you could do that in a couple different ways. If I had E-Trade and I had multiple different accounts in E-Trade, like multiple different companies I'm invested in, then you may want to like summarize it in QuickBooks and possibly track more detail of it in the E-Trade reports, as well as in, you might put it in Excel to track kind of the detail of the activity. You know, you could track the detail of the activity that's happening there and possibly group them together somewhere on the balance sheet so that you can have the detail elsewhere. Or you can put a bunch of accounts that are more detailed on the balance sheet. Or you might want to track them by major, account type or major who you're invested with. So if you have investments with E-Trade and like Vanguard and other, and your bank and other institutions that are all in stocks and bonds, maybe you want to invest them or put those subcategories separately on the balance sheet so that you can then have the detail in the financials and just kind of give the overall summary numbers here. So if you wanted to do that, maybe you want to create a subcategory of investments and then have a list of your investments in some way, shape, or form underneath them. Let's consider what that would look like. So if I went back to the register then, or the first tab, and I select the drop down and I go to the accounting chart of accounts, I'm going to close the hamburger. And I'm going to say, all right, I have this investment in E-Trade. What I'd like to do is make an investments parent account and then have the E-Trade account be the sub account of it. And then if I have any other investment accounts, they can also be sub accounts of the parent investment account. So we'll practice with the sub accounts a bit here. So I'm going to add an account then. I'm going to go back up top, want to add a new account, and I'm going to call it an other current assets type of account. It's going to be other current assets. And I'm going to say that it's going to be just other current assets. Actually, I'm going to put it in as investments. I'm going to call it investments, but the name here, I'm just going to call investments, not investments other. And this is going to be the parent account then. So that'll be our investments. And then I'm going to say save and close. And then if I scroll back down, let's say, okay, where did it put that? We have investments here and then E-Trade right underneath it. Now I want E-Trade to be a sub-account of that investments account. So I can then say I want to drop down and edit this. And then I can make this a sub-account of the investment account. So I'm going to say sub-account of the investment. And then I can keep the name as investment E-Trade. Or maybe I just want to remove the investment portion, keep it at E-Trade. Save and close, and then what does that look like in our chart of accounts? If I scroll down, now we have investments with the subcategory here of E-Trade. What will that look like on the balance sheet? If I go back to the balance sheet and refresh the balance sheet again, scrolling down, now we have the other current assets, and we have then the investments as a subcategory, and under the investments we have E-Trade. So, and that will allow us then to have other types of investments underneath that, if we so choose, that'll be in that subcategory section under the investments.